There's a lot of green shoots in the horizon. The economic rent equation across every sector is increasing.
In most markets, there'd been quite a lot of build-up of sort of pent-up demand, quite a lot of pent-up supply from transactions that hadn't happened. So the events of recent times have just sort of set us back maybe a quarter. It's clearly going to be a temporary moment in time, and lots of our markets have really good fundamentals.
The macroeconomic indicators were looking broadly positive the second half of last year, coming into the start of this year, and unfortunately, cost of capital has shifted, and then you overlay the geopolitical factors on top of that. But I think overall we're still seeing positive sentiment towards investing in Australia.
I think the fundamentals of the markets are very strong, but it knocked that confidence. So I think it's how we bring that confidence back, and I think with some of the occupational users, you'll see some great leasing deals coming through that will remind people there's really good growth, particularly in markets like Sydney and Brisbane. Markets like Victoria is sort of at a different stage in the cycle, but that's good for the value buyer. So a little bit of this choppiness is something that investors can take advantage of. And my view is I think rates are going to be coming down next year. If you look past that and have some longer term vision, I think you could do very well out of investing right now.
Often we need a difference of opinion for turnover to really kick in. And I think a lot of the challenge we've had in recent markets globally is that everyone's been of a similar view. Some of that volatility can help to create that market movement.
We actually attracted a lot of capital that wouldn't normally come here. When the world looks shaky and rocks, we look safe.
We are a smaller market regionally. We're still getting a lot of inbound interest from particularly global managers coming out of Singapore and Hong Kong. In some cases, that's Asian capital or Asian domiciled capital. But they've been assessing our market for quite some time, and whilst there is this dislocation happening, they also see that as the opportunity. And certainly some of the capital recycling programs that are underway are creating opportunities for those groups to really progress their interest in our landscape.
Sometimes it takes overseas investors to actually give us a little push along to say, hey, the Sydney CBD is a pretty great market.
Consider Core. I think Core is a really good opportunity and will perform particularly well in these really strong occupational markets.
Conduct a strategic portfolio review and be open to engaging with new partnerships, because we see capital partnering as very much a strong pathway forward.
Stop thinking short term, think mid term, longer term in your investment decisions.